Um, I went through um, just all of the. So 88% of the time it stays above zero point 0.5. In the 7 instances that we have, it stays above zero point 0.5. And then the median is still -2 or negative 0.2. Um, and there's only one instance of negative 0.5 at a 4 o'clock confirmation. And then negative 0.3 is like the drop off in between the 56 instances. There's only 3, 4, 5, 6, 7, 8. There's only 9. So it's basically like 80% is 88% is above negative 0.5, but like 90% is like total. So I kind of set some rules. So I'm always assuming it's a true day. I'm not using models in this backtest for this specific instance. The first trade, if there's no magnetics, so like here is an example. I just like saw that up to this point there was no magnetics. So the first trade, if there's no magnetics and there's nothing for it to come back to, is going to use the medium retracement plus 1 tick. So like in this case, it would be the negative 0.2. The second trade would use time and the M7 retracement if the negative 0.5 is above not 50%, 80%, with a better profit level based on max extension. Now, something else that I remembered is for quant, we're not supposed to actually subtract negative 0.2 from this because it's much more precise. So I'm going to use the extension. And then what I notice is the only thing that really changes is if it is a 4 o'clock confirmation, the extension is actually way higher. So what I decided is for the testing, if I select a specific time and it's less than, say, 15 data sets, I'm just going to use the overall average of all of the times, because it looks like if it's going to be a true day, like, so this is all of the times where it's been a Friday true long red box. And it's basically saying that out of the 56 times that this has happened in the last 15 years or whatever it is, there's only been 3, 4, no, we didn't include 0.5. There's only been 1, 3, 4, 5. There's only been 6 instances where we've got a true confirmation that it's broke the negative 0.5 and still been a true day. So you're basically saying that if this is the situation, you're almost just worth, like, it's almost just worth sending it and taking your 2 bullets. So yes, no. So if there's no VIBs, so like here, when we get this confirmation, we're coming out of the weekly DR. Let's take a look here. What's happening? So we've already rejected the open line of the weekly DR 3 times. We just rejected the close of the weekly DR and filled the gap and no VIBs. So for me, on a day like this, if I'm sitting here watching this, I'm going to have these rules open, and all I'm going to do is I'm going to draw my fibs. So what I want to see is if I was to open a trade here, there's no magnetic VIBs, so I'm going to use the median max retracement of negative 0.2, which coincides with The volume presently as well, which is good. And to find my extension, I'm going to select the 4 o'clock. So it's going to be 2.8 is what I'm looking at. So 2.8 basically aligns with this. This is weekly on mine, I believe. Yeah, weekly box. So this would be where my final take profit is. But what I want to know is at the average of 1.9, can I get a 3R? And I can. So my actual take profit would be here. We're getting a 3R. So we would just enter this trade right here on this candle close, and we would see what happens. So we don't even get a directional imbalance. So we're basically just assuming that it's not coming back into the weekly DR. There's no magnetic VIBs, so we want it to go. So now here, I would have marked out 1.9 because that's where the median max between all days, and it's only 56 data sets. So we would be interested in potentially moving. So we'd be break even after 2R, obviously. That's just standard. So I'll add that here. B after 2R. And we'll determine when and if re-entries are valid as well at some point. No, like, so if this came all the way back and break evened us, are we re-entering, or are we walking? Now here, price didn't really come back to the magnetic, created another magnetic. So I would be happy to move my stop to below this magnetic just to lock in profits, because we already hit the median max extension target. Now our extension time is at 8:15 on a day like today. So it says like the mode extension is 8:15 to 8:30, and it's like by far the extension, and we can see all kinds of retracements anywhere in here. So once I lock in, I'd probably just lock in 1R actually, and just be like, I'm happy if it hits this, my stop. Yeah, of course. Will be 4R for 1R, right? Presently. Oh. Yeah. Yeah, so basically my thought process with trailing is if price is just showing that, like here, it's just there's no real retracement and it just starts extending again, I don't want to over trail because now there's magnetic VIBs open. I either want it to hit target or I'm happy with 1R, because that's still profit, right? Like you could make the argument for no trailing, and these would just have to be rules that you would have to predefine. Yeah, and but that's what I'm saying. There's nothing here, right? So like to me, in this current setup, this is either just going to keep like going, and you could keep moving your take profit, and like you could start trailing once you see something. But like there's no limiters here. There's no like I've got all my all that stuff on, right? So there's literally this would be what he considers as highway, and just like price should just keep going until it doesn't. Like you could argue for the previous session RDR high. Yeah, it's and that's just mm-hmm. Yeah, and that's just your own trading plan, right? Um, so like for me, I would treat it different on ES and NQ just because of how they move. But oil either like super trends or it basically just stalls out and reverses. So for me, like I wouldn't actually have a take profit probably set. Like it would just be like forever floating until like I saw a reason to not. Um, and especially in this case, so like we're past the median. The so 2.8 would be what's the most it's ever extended? Yeah. Where is that? Right here. So 3.1. Yeah, so on a yeah, so you like if you wanted to be more aggressive, you could be behind this magnetic, right? That's really the only place you could be right now because like there's nothing here to base that off of, right? Yeah, so like something like this here, if I didn't have my take profit here and I just had it up like I said, now here because we ran through like the highest extension that's ever happened in a day for sure. Like now I'm behind this limiter and I'm just hoping that it keeps extending. When I see something like this, I'm probably just coming up to here. It's like now I want it to either just continue to extend or like I'm being stopped out and I'm not losing much, right? Like the difference between where that would be 5.6 and this would be 5.7, or I guess it's like here 5.56. So like we're between a half an hour and an hour behind by this setup, right? But then you can also make the argument that like we already hit our target, right? So you could be even more aggressive and be like, hey, well, this is where I set my target is. It's going sideways. It's either tapping this or it isn't. My problem with that is you're not giving it any breathing room. So then what do you do when it taps this and keeps going? Like do you just accept the 5R, which is fine, but we don't know what it's going to do. like that. Right? So like I personally would have had my stop below this limiter, as I said, and then because I understand how transition trades happen now, I would probably close this at the end of the ODR in this case, because I'm not expecting this to continue extending. So like I would have closed at the 8:30 candle for 6.9R, because I'm fully expecting this to have some form of a retracement for the model trade, because we have a broken. So this would be my time and price, and then I'm not trading models in this back test, but then I'd be looking for some kind of model trade. Confirmation on this one was 4 o'clock. Yeah, and that's why I said, so like my initial trail, once this moves to my 3R target, is just 1R. And then if it comes back, yeah, I still made an R today. Like that's better than 99% of the population. Like I'm happy with that. And then if it doesn't come back, because the thing with oil is it revisits a lot, right? So then that's where what you're questioning is I'm gonna add this screenshot. What you're questioning is based on the Quantex data, what is the highest probability to happen? And if the median retracement above 0.5 or the max extension above 0.5 is happening 95% of the time, then we can assume that it's going to extend once this confirms, at least past here. So you could even have a super safe stop, but I think the rules are just whatever you define. And as long as you, like for me, I'm willing to trail at 1R at 3. And then once it hits the median max extension, I'm willing to, if it gives me something like a limiter, trail behind the limiter. And then if the extension time is this big, where 8:30, 8:15, 8:30 is the extension time, I'm probably not trailing past here. It's going to either come back and hit this, or it's going to do something like this, and I'm just going to close it at 8:30 as planned. Or if I start seeing like we get this rejection, then this comes up and this rejects, like I might actually close it like anywhere in here, because I'm seeing like this is obviously it's something's limiting it right here, right? Like that's pretty clear to see. So once I see something like that, it's like, okay, 6, almost 7R. I'm good today. This is a great day. So you have to use the data and judgment, but you also have to accept that, like, say this did come back and it hit my 1R, unless there's real data-driven reasons to re-enter, you're probably just done. You're like, hey, I got my 1R, I'm happy. Tomorrow's could be a better day, right? I think people just overcomplicate trailing, because it's really easy to beat yourself up in hindsight. Whereas I think if you just follow simple rules, like I'm locking in this much profit at this R, if it hits this target, I'm willing to do this. And then if the extension is here, then I'm just done trailing until this time. And if you get stopped out, you get stopped out, right? It's accept your. But exactly, but when so like if you want to take the time to go back test every single style of model, every single style of price action, every like sure you can, but like your rule set is going to be exactly like you're like okay, I need the rules that I've defined for Friday long true day red RX model ODR like yeah, like are you gonna have 25 different rule sets for every like I think I think that's just asking too much of a person. Now, that being said, someone like Olia, he probably does have all that. He's probably got a list. He's probably got like a quick find something like whatever, and he probably does have all that, and that's why he does so good. But it's like I don't think the average person's doing that. I think the average person needs to define a system, and it's a psychology thing. Like, hey, if you get stopped at 1R, just be happy with that. Like, because what people do is they'll like say this came down, this stopped them at the 1R. They're like, oh well, this isn't anywhere near the max extension, so this is going to go up, and then they buy in and get stopped, buy in and get stopped, buy in and get stopped, instead of just accepting that, like, hey, this wasn't a trending day the way you were looking at it. Oh, a million percent. It you need to back test it, um, and until you back test it, and like it's not even just about back testing. It's about back testing and forward testing because it is way too easy to back test stuff. Like you can back test and rationalize anything, but if you haven't implemented it as a forward test, your back test isn't going to mean anything because backtest is hindsight. Most people don't do what I did here and say, okay, these are my rules. I don't care what this next candle does. I'm entering here. Whereas some people would print this candle and then they'd be like, oh, well, I would have entered here and my stop here. Mm-hmm. Yep. 100%. 100%. So Friday, true long green box. So all of my back testing incorporates this. Like I enter here, no questions every time. So we would go on the see, and I don't even use like I guess I am using it because I'm using Quant now, but um, I was doing this way before Quant. You can ask Will. Like this, I I started seeing this because I've done like 1,200 back tests in just CL, and I was like, if there's ever a dib for confirmation, yeah, it's a full send. Like you're just like I didn't even tag it. It was just something I witnessed, and then I like I remember this probably would have been like 2 or 3 months ago now. I was doing some back testing with Will and J Bell, and I was like, guys, you can go back test this yourself, but like I'm telling you right now, if there's a dib after confirmation or like into confirmation, just enter the fucking trade. Yeah. Hold on, I gotta turn your up. You're really quiet. Hello? You're really quiet. Yeah, I've got him at 200%. And I've got headphones on, but that's fine. I can hear you. No, it's so if yeah, as soon as you see the open dib, I'm in, and I've already like thought about where my stop would be. So like here, as an example, there's two things you can do. So you can use the average, which is all the times combined, and you've got the negative 0.4. We still have basically an 80% chance that it's above negative 0.5. Or you can use the 1030 confirmation, which says negative 0.5, but there's only a 65% chance that it's above negative 0.5. So in a case like this, what I would do is, and this obviously is just something you have to backtest. Hello? Can everybody else hear me? Okay. In a case like this, what I would do, so because there's no magnetic VIBs here, other than this one way down here, and I wouldn't want it to come back down here on a true day. I'm gonna go. So our extension is 1.6, is if you select the 1030, and it's 1.4 if you select the average. So I would put my stop 2 ticks below the negative 0.1 or the 0.1, and I would just assume this is going to be a day where I can move my stop to break even. And if it comes back, well, it comes back. But this would be my entry on this dip, and I would already be ready. Like I would know, okay, on a 13 point or 11 point stop, what's my risk, and I would just, like, as soon as this dip happens here, I would be in the trade. Well, if you're so like, yeah, it's yeah, and then it's like, if this fails, I'm willing to wait until our M7 retracement time windows to look for a second trade. Yeah, well, it's basically, you can just look at, so if you look at, oh, that's fine. It's the same. Yeah. The box color. Oh, yeah, so it's like, it, it's really weird, but like the data doesn't really change a whole lot, right? So like, if you use all the times you take away the filter, I would why does it do this? I would argue that the box being red or green changes the data more than selecting the time. Like, all time does is it accentuates certain areas, Whereas the red or green box is saying the consistency of what it does. But you can narrow it down, right? So like here, you could use the 77 data sets, or you could take away the box and use 99. But it's the same. So it just depends how you want to look at the data, right? So if we go to 1030, we're basically so negative 0.4 to 0.5. So if you wanted to be like safe, you could say this is where I think it's going to go, and you're basically, you could do one tick below negative 0.5 and you get your 3R. For me, because I'm just sending this, I'm just saying, like, I'd rather have a 9.8R and look for a second trade. And but this is also only because of what I've seen in my back testing with directional imbalances. If I wouldn't have come to this conclusion, I would do a much safer stop. But this basically tells me, especially when there's only one magnetic at the very, very bottom, this is either just going to continue this trend, or it's like reversing. Like there's no, it's very rare that this ends up being like a sideways day with a extension like at a weird time. Exactly. So now right here, we got another dib. Like I'm break even. Like this is I'm happy here. I'm stacking the dib. That I haven't back tested, but you can let me know how that back test goes. But in reality, you could, when this dibs up, and obviously this is circumstantial, like we already saw it, right? So you could now have your stop partially in profit, and you could take a second trade on that dip up. I think you'd really have to back test that, but so this is above the break even, but I would just be break even. We don't need this on here anymore. So on a false day, I just like to look at the false day data to figure out what the extension is. So the median extension is 0.6 for false day, and 0.6 to 0.7. Basically 0.6 to 0.8 is like the big one. So excuse me, we went into 0.8 to 0.9, so I'm not expecting a false day out of this at all at a 1030 confirmation. Now our extension time is 2:15 to 2:30, with retracements dropping off at 11:30. So at 11:30, actually we would say 11 at 12 o'clock. So we're gonna fast forward a bit here. So when we start getting this action, because I have such a tight stop and I'm going for 9.8R, I would for sure be here. I'd be locking, what is that, like probably 3R or something now, 2.3. What did I say, 1.6? And on a day like this, so when I have like a 3R trade and I'm aiming higher, through trailing and all that stuff, or not through trailing, but like just assuming it's going to go higher, I wouldn't have a take profit. If I'm ever around 10R, just like as a trade, I'm just taking that as my profit. I'm not trailing, because I just personally how I want to be trading. Trailing past 10R, I think, is just greedy. And I would hate that, say this came up, unless I saw something like crazy, but I would really hate if this came up here and then like had a one candle down to like 5R. Cause it's different when you're giving it lots of room to breathe for like 3R and you're like trying to get 5, 6, 7, 8 out of it. But when you've got such a tight stop, losing 5R to me is just not acceptable. But what are you aggressively trailing here, right? So like you want to be directly behind this VIB when it gets created, because then you get stopped out right here, right? Oh yeah, that's fine, but none of that existed here, right? That's different. Like weekly DR, like you can even use that as an example here, right? Like once we break out here, this is the weekly DR right here. This box that I have. Um, yeah, like once we break out after we've had all these rejections, like this is what you're expecting out of a day like this, or it's going to like come right back through and it's just gonna like plummet. So it's fair to use that in this type of case. In this case, yes, we have the magnetics, but it's like, what are yeah? So I would have been 2 ticks below this bib. For me, if you wanted to be up here, that's fine. You're just like, even if you go 2 ticks here. So my rule for Vibs is actually, I probably would have been up here, because my rule is I'm not willing to move my stop up until we have a clear break above and a close. So like when we get this candle close above the previous high, I'm willing to move my stop 2 ticks below this. So I guess like I probably, when we broke this high with a strong candle and no wick actually, I would have been here. So no, I don't care about the swing. I care about I don't want it to revisit, right? And we've already, so like if you unselect um the time and you just go as an average, 1.3 is the average. We're in the 1.1 to 1.2. So it's like we're only one deviation away. Do you really want to risk it coming all the way back? Right? So once we get that structural break to the upside and a close, I'm like, okay, I'm willing, like we're one deviation away from here. I'm happy moving my stop here. It's 5.5R. So that's where I would have got stopped out. And that was a 10:30 confirmation. Well, would have been stopped out. Right, but so the problem with trailing is if you aren't doing it with specific reason, you're going to you're going to lose money. Yeah, because most people are just they're not rational about it. And then when they're not rational about it, as soon as they get stopped out, they re-enter, and now you're not just losing your upside equity, you're losing way more, because now, like, say you get stopped out here for the reason that we said. If you don't have that reason, you just moved your stop because you're like, well, M7 said don't have an upside, have a tighter stop. Now people are like, hey, well, I got stopped here. We can just put another one and we're going up here. And then now you're just losing, right? Well, and it's more so people just that haven't done enough back testing, right? Like it's like I truly believe the only people that don't make money with the IDR. Just don't believe the system because they haven't back tested enough. Like you can't lose. Like it's so dumb. Um, yeah, 100%. But that's a mind thing, right? That's not a DRIDR thing. That's and it's the same thing. It was probably 2.5 months ago. I told Will to stop fucking around and stick to his plan. No, I did. I literally said that directly to him. I was like, bro, like, why are you trading this way? Like, this isn't DRIDR. I'm like, stop it. And he was like, fuck, you're right. No, he didn't. No, he fucking. Yeah, I'm not. I'm. I would rather tell somebody exactly what I think about what they're doing and then never talk to me again than be like, oh, you'll get there one day, buddy. Well, yeah, because that's the easiest way to win, right? If you that's that's right. And I've said this a lot in my other like lives I've done is this is what people so like and I had the FOMO too with watching Olia and Anand and all these guys getting like ridiculous R. I'm like, man, I want to be at that level. But then you only need that level for such a limited amount of time before like you're financially in a place where like to let's say you had a seven-figure account now to make $300 on 1% on $1 million. Well, you just made $300,000. So how like and that's not even before you account for the compounding. Like you probably made closer to like $450,000. So how many times do you need to do that like before you don't need that anymore? So the consistency of maintaining co- consistency and compounding your money is by far a more important thing to master than trying to find ways to make that $300 a month. Like if you can get 50R consistently a month, you could have a higher risk. You could do like 2%. And if you know that you can do that consistently, that's going to be way better for you than trying to micromanage how to squeeze 300R out of the market. And then and I said this I think the last time I did one of these is say you want to try and get that 300R. Well, get your main account to where you want and trade that account specifically with this consistency mindset and then put 10 grand in a new account and try and be advanced over there. And then that way, if you say you blow the 10 grand being hyper aggressive or whatever, you're not actually affecting what you're creating for your stable life. That's right. Mm-hmm. Yeah. It well, it was oil. It was yesterday. It was everything to me said that the short was the valid play. I had one break even, something like this, and then I had another. I lost this other one, and when I lost the second one, I just said, "I'm obviously not looking at this right." I left, and then when I was at the gym, I was working out. I was thinking about like, hey, we had this wick confirmation, and I just ran through like so. I was re-engineering in my head while I was at the gym, and I was like, why did I? I'm like, why was I against like once we had this wick confirmation? Why is my bias still short? I'm like, we know that on a wick confirmation, it's an 80% true day. Doesn't matter that I think that the weekly DR or like whatever, like all the confluences that were saying it was a short day, the red box, the sweep of the ADR and the ODR, like there were a lot of pros to a short day, but we had a confirmation. Like the only way my trade would have still been valid is if this didn't confirm. We tap this DR, and then it's like, okay, this still makes sense. But as soon as we had that wick confirmation, my brain should have just switched, and it should have been like, nope, we're not taking this short. We're looking for the reason to go long, and I could have had another 10R. Yeah, but this is the dibs are irrelevant. Well, actually, no. This I would have entered on. That's yeah. Oh yeah, yeah. As soon as basically like so, my rule is I'm willing to lose 2R on a day between all assets that I trade. As soon as I identified that I broke even on one and I lost on another, I just identified that I obviously wasn't looking at something right, and I walked away. What I should have been able to do is go, okay, I lost that R. I still have an R. We have a true confirmation or a wick confirmation. I should have just been able to look at it and be like, hey, this is the trade. But I wasn't able to make that flip, so I just said, hey, I'm going to the gym. See you later. And and I do think being able to walk away is like I don't need meditation for it because I actually don't know why I don't need it. I've come to the point in my testing. Yeah, exactly. And I'd rather just come to the next day and it's like, okay, like even if I lose today, I know that if I stick to my plan consistently, then I'm making money. I don't like, and this is what I was saying with DRIDR is you literally can't lose if you just back tested 1,000 trades. I can't. No, you can't. That's a bad mentality. Um, okay, so change that mindset, right? It's I. You can't lose if you do 1,000 time and price back tests, and all you trade is time and price over a 3 month period. It's impossible to lose. It's actually impossible unless you're not following your back test, and it's easily proven through the metrics results. All right. So the only reason you could be losing on time and price is if you're not following the rules that you've defined in the time and price. Well, three R on 10 grand is $300, right? It's like, and then, so like, one thing that you can do to like give yourself like a visualization, this is what I did when I started trading, is like take whatever you started with. Say it's 1,000, say it's 10,000, whatever. Say you're trying to get 1% for 360 days as an average. You're reinvesting 100%. You're not including weekends. You start today. At the end of a year, you have 360,000. And the visualization part is, yeah, yeah. I don't like the metrics one because it does it's not as it doesn't show the future. It shows what you're actually compounding at. So why I like this is you can start today with $10,000, and this is what every day should end up at. Obviously, there's going to be up and down days. So what I did when I started is I highlighted every 30 days. I said after 30 days, if my account is around this, I'm happy. At 60 days, if my account is around this, I'm happy. And I did it for every 30 days because that gives you a pace, right? If you're blowing the account, well, then you know you're not at this. And metrics is good to like visualize your like your own consistency, because you can see the like how the graph articulates, but it doesn't, and it'll show you like a good back test. Like, so if you go do a full year, it'll show you where you like started and where you ended up, but it doesn't give you what to look for in the future. Exactly. The equity curve doesn't show you, it only shows you what data you've given it. It doesn't show you where you're going. Yeah, like it'll show up to today. It doesn't show you, hey, if you kept doing this for 6 more months, where are you going to be? And I think the visualization power of where you're going to be is indefinitely stronger than where I'm at today. But that's how I operate. Like, I don't care where I'm at today. If I'm ahead today more than I was a month ago, I'm happy. But if I keep doing this, where am I going to be in 3 months, 6 months, a year from now? Because the other thing that metrics doesn't show is it also only shows um, if you're doing everything at the exact same consistency, right? So if you can put all of your trades in metrics, but if you say risk 1% on this trade and 2% on that trade, and then you get mad and you risk 3% because you lost both those trades, it doesn't show any of that stuff. So it doesn't actually show consistency, and you can keep putting money into an account. So like you never, it shows if you're being 100% true to your system, what you should be at, which you can reflect off of. But it doesn't tell me where I should be or where I could be. So that's my only negative to metrics. Don't get me wrong, I use metrics all the time. I love metrics. I just think that the equity curve, and I think it could be improved upon a lot for like visualization purposes. But I even have, so I use metrics, but then I have my own compound spreadsheet as well, because I can put what my account actually started at. I can put what my account actually ended at. I can incorporate fees. I can incorporate um, everything into it. So I use that as well as metrics because it tells me how many more trades I need to get to my goal. It tells like it's everything. So it's like I'm a I'm a very visual person, and if I can't see the daily pros and cons of what I'm doing, it's not accurate enough to me. Um, but anyways, sorry, do you have something to say, Will? Oh, mm-hmm. Mm-hmm. Yep. Yeah. Well, and that's kind of I know the last time we did a really massive back test, I said I'm always looking for 5R. Like, so I kind of try and position myself to where like 5R is just what I'm looking for out of a trade. Now, there's exceptions, obviously. Um, when you're trying to be super aggressive, like something like this, you just can't. But like for re-entries, it's really situational. It just depends what everything's showing you. So like here you get stopped out because you've got that tight stop. We're already at target. So like there's no reason to re-enter here. Like you're basically that's right. You're basically moonshotting. Like you'd almost be smarter to when you yeah, like you see this here, you could go to here and you could go back to the DR, right? Like that would be smarter here than trying to go for a higher extension. Obviously, I would never advise that because you're trading against confirmation. But um, I, well, and this is just what I was just going to talk about. So we actually have um, so the retracement drop off, like true drop off for a day like today, I would say, where was I? Right here, retracement time is 12:15. So at 12:15 or at 12:20, we just got a new low created. So now it's arguable that you could look for a short because we've just passed the like 70 percentile zone for a retracement. Now, unfortunately, this is like where you're looking for the short. So I wouldn't do it, but like when we create this new low, you're never looking to relong it, because this where was it? M7 retracement time. So the like last tower is 12:15. So this is saying that 70% of the time there's never a new low created before an extension here. So like when this happens, and then again like 750 is, or 1250, where it's 77% of the time. So it's like the odds of now hitting a new high is like you're trading against probabilities. So this is just, once this happens here, you should be just done for the day. Like you shouldn't be looking for anything. And arguably, once you see this big push down, and then this push down, and then this push down that closes below the swing low, you should just be done here anyways. Like this is like this is super bearish price action. Like this is literally saying, hey, we're probably coming back down to this bib. Yeah, like yeah, so yeah, it's stopping here. You're right. There you go. We end the day above 0.5, and we went above 0.5. That's funny. So ADR, not interested. So then we have no reason to believe it's a true day yet. Never mind. I was going to say, like, these are the times where M7 would say you could trade the green box to the upside, but I'm not doing box trades, not part of this. So I didn't mean to do that. Go here. So we've got a green box. This is Monday. True short, green box. Got our gap here. The median max retracement is a negative 0.1. And 95% chance that on a true day, it doesn't get to negative 0.5. And that's like unbelievably powerful. Like that's literally saying that if you see any type of rejection in here, like you can just send, and like you know that it has a 91% chance to go past the negative 0.5 or the plus 0.5. So in this case, if this opened with a VIB, obviously I would take it. Otherwise, our retracement time is basically 10:45 to 11. Oh, I'm not on ODR. There we go. So negative 0.2 is our median retracement, and we have an 85% chance to stay above 0.5. Our M7 retracement drop off, however, is 315 to 430. So let's just put this in here. Just so that I don't have to keep this open. And then this actually is saying that the drop off is like 6 to 615. So we'll put, this is a late day for retracements. To me, again, I'm same as M7. I like the short, shallow, and extension. But the M7, so 0.2 is the median max. It's also the like major drop off for the 70 percentile. So like past here, we're not really looking at it, but we do see all the way up to negative 0.7. And then if we do a, this is 435, just to check. So 0.5, so there's 12 data sets for 430. And it's actually saying that there's only a 70% chance that it stays below the negative 0.5. And it's actually saying that the median max is negative 0.5. So I would be looking at a trade to come in between here for myself. And then I would use, there's only 3 instances where it's extended past that. So this would be where I would personally be looking for a trade. Because negative 0.5 is the median max, and negative 0.2 to negative 0.5 is like the median to the 70 percentile. So like, yes, you have your mode here, but this is actually saying that out of all the data sets for 430 confirmation, the median is negative 0.5. So like, unless I saw a reason to take a short, shallow retracement on a day like today, I just wouldn't. There's other confluences here as well. There's our gap fill wouldn't even take the lows. If all we did was the gap fill and bounce up, obviously we're looking for the RDR gap fill, not the ODR gap fill, but it still does respect the gap at times and then comes back and does weird stuff. So we're looking for a retracement around the 315 mark. Now here, price it down. Yeah, I probably missed this if it goes. So next candle, next candle. So it's saying that the median retracement and the max retracement are very similar at the negative 0.2, like for M7. So I would wait till here probably. I probably actually just don't end up trading. Yeah, there's nothing here. Like you could argue that when this came and rejected below the DR again, you're using this as the AMR if it comes back up here. But my problem with that is when we make equal lows, I assume it's coming up here. So I probably just missed this day. But let's look at the data and see. Yeah, so this extends, and then we have our. This is a retracement window, right? So like I'm assuming that it's coming back up. M7 retracement time 6 to 6:15 is like 78% of the time. That is the last retracement before a new low. And then this dibs up actually before it drops. Yeah. So you could take your one trade, assuming this is the AMR. 0, 2. And I guess if you're actually looking at, so this is, I was using the 0.1 to negative 0.2 as as like where I was wanting to see it, but the mode technically is 0.3 to 0. So we don't break the 0. So at any point in here, on I guess this candle close, you could have entered here. Your stop behind the 0, and you're going for a 2 extension. That is valid. That would be time and price. And then once you're 2R, you can come up to here for a trail. When you get these dibs down, and you get this M7 special, you can go here. Once you break down again, you can go here. And that's where you'd get stopped out. So why didn't, so what was I looking at that I didn't, oh, I was looking at the 50 and 70th percentile. So I guess that's something to note, is just because the lines are here, it's still good to look at the clusters. But I was looking at this because the median max and the M7 retracement basically say negative 0.2 is like a very high probability, and negative 0.2, basically 60% of the time it's hitting that. So you're, by taking this trade, you're just, it's basically you're hoping it doesn't come up and we make a new low. So I probably missed this trade. This is something I just have to backtest some more to figure out. We have our 2 retracement clusters. Where would you enter here? So I'm not putting that trade in my metrics because I would have missed it with my current rule sets. Holy box size Batman. No. No, this is no transition stuff, just simply time and price following like a strict rule set. This here, like I'd be long here all day. Don't even care if it's a red box. Yeah, we just had 5 rejections from, that's 1, 2, 3. We actually had 6 rejections from this limiter. We didn't break the ODR structure. We have a broken model. We already had our gap fill. And this, to me, I probably would actually end up like in on this candle, but you could argue for now we've also had the impulsive price action. So like I see this is coming up. I'd be break even like really quick on this trade, and then I would lose it. So you could also just wait for this. Like, so now this didn't close below the DR. So now we've swept the previous day RDR high or low. We've swept the ADR and the ODR, and we didn't get a body confirmation. So this would be, we're obviously going to trade the wick confirmation because that's what we're back testing. But this would be a very risky trade, like in my opinion, because you're that's right. And the thing that you have to be careful of is, so if you're building your rule set, and this is just following your rules, right? If we get a wick confirmation, you just have to trade it. This isn't, you can't, and that's where I messed up on Friday, is I took my own bias after I was trying to do a transition trade and just kept that bias instead of saying, okay, we have a wick confirmation, so if we go wick Monday, this is Monday still, yeah, Monday RDR. Okay, so you're skipping it based on your rules, and I'm just trading time and price off these, so we'll see what happens. So the median max is, and that's important, right? Like, so if your rules say that like you don't think that this is going to be a true day, and like your back testing says that you don't trade this, then yeah, just walk away, close the trading view, and like that's your rules. But if you're trading time and price and you've back tested that 60% of the time this ends up still being a true day, then you just have to trade it as if it's a short confirmation, right? So this is where whatever your defined rules are for that day, it is so important that if you've back tested that rule, that you follow it, because otherwise you're negative EV. Well, I would argue Anand gets 50R a month off just time and price. So, like, and he probably gets more than that now because he's like, but he only trades RDR anymore, and he only trades time and price since his kid was born. Yeah. Yeah, the market is against human psychology. Period. It's that's that's what it's designed for. Yeah, like it usually moves against what you think, but it also moves within the reasoning of like understanding that reverse implied logic as well. So it's like unless and that's why being mechanical is so important, because if you understand your edge and you understand the mechanical side of it, then that's what makes it really hard to lose. Whereas if you stop being mechanical and you start being ICT, you're going to blow accounts. So I think I missed this because I was looking at, so 1.4 is the extension that we'd be looking at, and I was looking at this and I don't think I can get anything reasonable off of this. I guess it would have been 4.3. We were talking and I was just printing candles. I probably would have done an adjusted 5R on this and would have got wicked in. Oh, J-Bell came to hang out with the boys for once. Holy fuck. So then when I see this, my stop would be above this limiter. When we get this breakdown, put no body close, I move to this Vib. And then obviously, like I said, I probably don't have a target till 2:30. But when we get that breakdown, I probably use the weekly box and this old magnetic as my stop placement. And where's 2:30? Way up here still. Uh, 2:30. I close there. I probably don't close there. I probably just, wherever this candle closes, so what's the difference between closing here? So 3.7, 4.2, a little over an R, or 3/4 of an R. So I'm fine with my stop here, and it's either gonna continue down or come up. So I get stopped out there. And then this would be an example of, so say you move to break even here because you're at 2R. This is where M7 talks about the better entry. So if he got stopped out here, his requirement would be, let's just move this over here for a second, that once he got stopped out here, that's right. So like he would re-enter this using the MR again, but his R has to be better than his previous going to the same target. It can't be extended. So like based on, so this, especially here, this is why I said this is a prime example. If this is our time drop off and this is where this candle closes, he would re-enter here using this as the AMR, going to the same target, and it would give him a better R. On the minute? On a on a no, I would never have a limit order. I used to use limit orders, but then after listening to M7, I never use limit orders anymore. Everything's market execution. And the main reason for that is because he always waits for candle close. And the easy way to explain why you should always wait for candle close is because, so say you got stopped out on this candle and this comes down and you set a limit order here. If you're not waiting for this candle to close to make sure that you're getting your entry, this could come up here. So you can be limited in and taken out in the same candle, not waiting for this to be the true AMR. And that's why I believe that M7 always market orders and always waits for candle close, because then you know that you're actually basing it off data and you're not just trying to get a better entry. Does that make sense? Yeah, so it's always candle close and it's always a market order. It doesn't matter if it runs away a little bit. It's like you still, this is still a better entry than this. And if you enter right as this closes and this comes up, well, maybe you got this as your entry, right? Like it's half of this, half of that. But what you don't want to do is put a limit order and then, so like imagine this was like your stop out, like just pretend, and then you had a limit order here. Well, you're sweating this entire time. This limits you in, and then you're like, fuck. Like this wick is 3 ticks. You're like, well, this is probably an R. I'm probably gonna have to YOLO in another entry. So it's just always market order. That's why I do it anyways. And I think that's why M7 does it. So this here. Oh no, this was not what I had. I had this one. And this here. And and our confirmation was at 1050. Okay. Time and price with quant, yeah. Just trying to be and doing things a little different than I did with Lens. I'm just doing March. I basically want to see what the end result is. I don't even know how to do that. How do you do that? Okay. Oh. Oh, like I gotta, it's not this, it's a different one. Oh, okay, okay. Oh, man. The things you learn. Yeah, and you don't want to like keep moving it over every time. You're a genius. Thank you. Okay, 405. Oh, yeah, I already knew that. Yeah, it shifts the chart. You can also use control and your wheel mouse, and it squeezes it. Oh, the side scroll does the same thing. That makes sense. Oh yeah, fancy pants over here. Okay, so we've got a Tuesday ODR true candle confirmation green box. So all the data is saying that negative 0.5 is the median max retracement, and the M7 retracement is between negative 0.1 and negative 0.4. So if we put this on here, that means we send it. There we go. We've got this. We've got the send it crew here. So and it's 76%. We've got 76% chance above negative 0.5, and we have no limiters here. So I would basically have negative 0.1, negative 0.5. No, it's the 29th from February. Yeah. And then our extension on a day like today is 2. So 4 points. Oh, this one you mean? Yeah. This is yesterday's. But this is ODR, so it's not quite as relevant. Yeah. So I would, because the median is 0.5 and the M7 is 0 to 0.4, I would just squeeze this for a 5R is what I'd be looking for. What do you mean? Yeah, so my rationale for this is up until we have a reason to do a market order, I'm willing on a day like I'm willing to take a 5R limit order, obviously. Like that would be silly not to. But if we end up getting a reason for a not like a different type of trade, then we would look at something different. One tick. Like it's just I'm one tick below negative 0.5. Obviously, if there was a limiter like right here, I'd just go like below that limiter. But so yeah, those are limiters. But we're no, I mean if the limiter was going through my stop, I would be below that. But basically, so a couple things that I've said is if there's VIBs, it's a lot different than like on a day here where there's no VIBs. So like I'm willing to just have this as my stop to start out with. If we get to the M7 retracement time drop off, which is 5 to 5:15 here, technically like 6:15 to 6:30. So let's put this in. So to 5:15. And what did I say? 6 to 6:30? No, 6:15 to 6:30. I'd be looking at like if our AMR at the end of here is still like up here, I'd be looking at a different like trade setup. But up until then, 76% of the time it doesn't break the 0.5, which actually I'd be one tick lower just because of the weekly DR. Okay, so we'd be in this trade and out of this trade. So here, kind of like what J Bell's saying, obviously, when we confirm into the previous day's gap, it's usually not ideal, but we're just trading time and price as a whole. Now, out of all the confirmations, for a true... Oh, I have them wrong. I have a short. Hold on a second. I just changed it to long. But it's... Yeah, no worries, man. It actually increases. So it goes to 82% is above negative 0.5. And our max extension almost always hits 0.5. This is one tick, so I would just consider that hit. But there's a filter for that? Oh, I see what you're saying. So, like, we're using the 0.76. So that's 0.7 to 0.8. Oh, I see what you're saying. So, yeah, so if this is our box size, this is saying that it's a 90% chance it doesn't break the 0.5. So, like, now, especially with that, yeah, so the thing... So, I was explaining this to everybody before, and this is kind of part of what I'm backtesting, is I think the green and red box is more important for overall numbers than the confirmation time. So if we just do 4, because it's a 405, it really isn't that much different. What changes is where our median max extension is. So for me, what I'm doing is I'm using this. So like what I'm looking for is, oh, I had this way too high. There we go. Is if I can get a 3R or better going for the 1.8 off of the green confirmation, then I'm not actually putting a take profit. I'm trailing based on like limiters and like all that stuff. But I want to know the just off of the limited Tuesday long true green box, can I get 3R to whatever this is? And then this is 200 data sets, so this is just way higher probability to hit. Whereas when you select the time, it drops it to 78. So yes, the extension is higher, but it's less likely than if you're just using all of the data sets. So this is just a... Yeah, and you could... That's right. So like, it's still saying that even... So if you're just using a green box Tuesday long... Yeah, so you'd be assuming it's long anyways because it's a green box. it's basically saying that if it does go long, 80% chance that you don't hit the 0.5, and you could be just aiming for 1.5. So that's basically what I'm trying to play with it to get high probability 3Rs with the ability to like go further if it wants to be an extension day. Relative, yeah. But it, like, the reason stop size doesn't matter is because you're just changing like your like what your risk is, right? Yeah, but the problem with that is like every day is gonna present different things. So, my bad. Drive safe. Um, oh yeah, no, gaps even in ODR are important because basically, so like usually what happens on a day like this is if it confirms into the gap, it's probably just gonna like come sweep this, and then during the RDR, it's gonna actually get the gap fill. So like, but it can do one of two things. So it can also confirm here, do some like crazy stuff here, and then come back and like go up or down or like whatever. So like, but you'll, yeah, yeah, 100%. We just swept it. It's it's more likely to come down. So like you could look for false days. You could literally just go back test candle gap fills and like see if false day confirmation or trades are a higher probability on that. It, I'm gonna bet 1R. But the so the thing is though, again, this just comes back to you. So we're testing time and price with like a slightly different variation. If you wanted to add in this specific setup, you need to go back test. It's like, okay, I'm trading time and price every single time it happens except for this because this is a higher probability to be something else. But if you don't back test it, that's just that's a feeling, right? That's right. Um so we broke the zero point 0.5. I'm honestly just not looking for any like I'd just be done here for the day. The so the argument that you could make, this is our time drop off. We just made a new low, so I wouldn't even trade this anyways. But if say this was the low, you could argue for a new high being created here. But when this makes a new low, I'm definitely way less interested. I could have one tick stop, just explosion. But then here, so this is like our final drop off. So I don't we haven't made a new high. M7 retracement basically says that it's more likely, so 07 is 08. So that is the last tower actually. So this is 07 to 08 by one tick. So 07 to 08 before a new high is created is like the 86th percentile. So it's like 90% chance that this is the low if it's going to make a new high here. So you could argue for a trade. I wouldn't take this trade, but let's just mark it up. And we'd be going for 1.5. And the reason that this would still be technically valid is because our extension time in ODR is always the 8:15 to 8:30 if it's going to happen. So this is the last drop off. we didn't make a new low. So you could open a trade here and pray. Let's see. And that's why I don't take that trade. Because past that, your max retracement time. Yeah, like, so we're at, how did I even get the 6? What did J-Bell get me to change? Oh, no, it was the true or false day. There we go. I didn't have true selected. So I don't know how I had the 615 on there. Last hour, maybe? Yeah. Anyways, so 82% of the time. Oh, there we go. Yeah. So, but why did I have it on short? Interesting. So that's fine. Yeah, that was terrible prep. So 615. Yeah, so basically, if we are using the 615, which is the 82nd percentile, this is just a terrible trade setup. Yeah. Then we confirm. Garbage. So now we swept the highs and the lows. Yeah, no, the trade was definitely when we, so extension time for a true Tuesday long day would be like obviously 8:30, but if we haven't seen a new high by 7:15, which is way down here, honestly, when we break this low, you could probably just short somewhere in here. So this is 515. So the price model extension retrace. Well, yeah. So if you flip this, it's funny. I wish you could just flip it on here. But if you flip this, this is basically our high, and then lower high, and it's exactly what happens here. So lower high, lower high. So at 5:45 though. So we've got. So we made a new low at 5:15. And that's retracements. So when we make a new low here, it's out. It's actually outside. It's like we really shouldn't have made a new low here. We're still within this range, but like the towers are all here. So it's like you could almost, when we start seeing all this rejection here, and then we get this dip down, like that technically, you could be above the limiter. We have the rejection from this limiter. It clearly doesn't want to make new highs. And you could go for a gap fill. You could go for the other side of the weekly DR. Because this is, we made a new low at the drop off time. So you could be looking for reasons to short. Yeah. But, so we lost, here, I'll put this in here. So we lost this, put this in my metrics. Confirmation time was 440. So that is our first loss for the time being. And then, oops. So now we get our red box. This is something I do want to go back test though. So this is, because we all know how I love dibs. So when this breaks the 50% and dibs up, can I just trade that? I've seen this a few times. Yeah, that's right. So when this retakes and closes above the 0.5, closes above the volume node and dibs up, can I just send that? I think I can. You you can even use the 0.5, right? Because we know that if it confirms, yeah, for sure. But the 0.5, if it confirms, has a 9. It's like a, what is it today? I can look. Yeah, yeah. And then I'm like, oh, I'm in here too. My stop would be here, and you're like, you know what? I'll just take another 3. So I get 10R in the first 20 minutes. I'm like, okay, I'm done. Uh, that's right. They're called dispos. So, so my rationale, the reason I stopped it right here is, so like this is my signature trade right here. Like I would just be in on this trade. My stop would be below the DR, and I'd be, I don't know, I'd figure out what my target is. Obviously, I would have ended up break even on this one, but in my back testing, I have also seen dibs either during box formation or right after box formation that just like scream to me. And this is one of them where the directional imbalance is created. So like as soon as this happened and this candle came up, I literally said, yeah. So I thought. Mm-hmm. Yeah, none. That's all fine. Um, but the reason for this trade was just simply we broke. So the box is formed. We broke the point 0.5 and dipped up. So like to yeah, I don't care about what happens in box formation. These dibs mean nothing to me. The exception to that is like say we had, and I guess this is kind of, but so we had all these rejections, but there's the gap fill here. So this is just filling the gap. Now if we hadn't already swept the lows, I would say that these dibs mean something. But because we swept the lows, I'm not. I'm looking for a confirmation to trade. Like if this came down, like went like this, didn't dip up, and then confirmed for a short, I'd look for a short. But that's right. So we already took the liquidity, and then we get two big impulsive candles. We cross the 0.5 of the box creation, and we dip up. Like to me, and yeah, like this is the same as my trade right here. It's like I'm just probably sending this here. And again, this is just something I've specifically seen in CL. Um, not I wouldn't do that in ES because I haven't tested it the same. But like it's just how it works. It's just how it works. And then so Tuesday, long, true, RDR. So yeah, and so this is saying so 82% chance that we don't break the 0.5. Yeah, so you have the M7 box. We have a true confirmation. 11 11 15 is basically 60% of all the retracements should have happened here. So you could literally enter on this candle close. You could be one tick below the 0.5 and you could go for a new high. You could go for 1.3, which is the medium max without selecting time, or we can click 1045 and it's giving us 1.4. Or you could do what M7's been advocating for and just not have a take profit and trail. And we would be out on this one. And then once it breaks the 0.5 at 1210, so our M7 retracement times. So like this is where breaking down time is important. So 1210, there's only been 2 instances ever in history where we've made a new low here and then made a new high. So like yeah, like so I'd just be done for the day here. I don't care what it does. Just go sideways. Look at that. Just another day where like if you simply just go, okay, this has never made a new high. I'm done. And you win. Yes, you lost an R, but you didn't lose 5 more R. So, and oh, for sure people did. But even so like you can so that was narrowing it down. So this is if I say 10:45, which is our confirmation time. if I understand it right, quant is off of like the actual time now. So 10:45, it's saying there's been 2 instances of this where it's ever made a new high after that being the low. If you take the time away and just have the true long green box, yada yada, it's literally the same. We go from 84.5% to 81.5%. I'm not like 3%. I've gained 3%. Like it's still, yeah, like it's still saying that in all of history this has just never happened. So like you just save yourself the pain. It's like, okay, I'm just done for today. I don't probabilities say that it's not making a new high, so I lost my 1 hour. I'll just come back tomorrow. I don't care if it makes a new high, because that's the fallacy, right? Is the gambler's mindset is, well, it has a chance. It's like, sure, but if you took that 100 times, that's all you have to figure out. Is if I took this trade 100 times, you're gonna be down. That's right. So the probabilities aren't in your favor. Like even if you, like, it doesn't matter how many times you run it. You'd have to get like a 10R to be profitable in that situation. Oh, I gotta add this to my metrics. This was a 10:45. Oops. Probably do 1 or 2 more days. We've already been, this is, yeah, 2 hours. 2 hours. We got to day 6. That's pretty good. Okay, so we got a wick confirmation. ODR Wednesday. Long true green box. We'll make sure that we've got all the right right things. This is our open line, so it's got to be the IDR to here. So 83% chance that the M7 retracement is above negative 0.5. We're going to 1.8 with no time set. 0.2 to 0.3 is our median and our tower. So in this case, I would be looking to have a pending at 0.2, be going up here somewhere. My stop would be 1 tick below 0.5. This would be my pending, and our retracement time, our tower drop is 4:45, so I'm looking for the entry to happen before here. And we would have got stopped out instantly. And once that happens, I don't think I'm looking for another trade. Was that 0? Did I not have my stop in the right place? Let's take a look here. Yeah. So, no, go ahead. Yeah, like, so 83% of the time on a true day, on a wick true day, it never breaks the negative 0.5. So to me, and our retracement time is basically like 4:45 is the drop off. So we've already went past the negative 0.5, and we still have lots of retracement time before the drop off. So I would need an unbelievably good reason to now re-enter a trade, because we have a way higher chance of making a new low than we do making a new high. And well, no, I would have got stopped out back here. The limit entry was, oh, yeah. No, I would have, yeah. So I guess, like, if you're, yeah. So you could technically have done, like, if you wanted to be more safe. So yeah, yeah. So like negative 0.4 to negative 0.5 is the drop off for M7, but the and the max retracement, the median is negative 0.3, and we have an 83% chance to be above negative 0.5. So 0.5 to 0.6 would have to be where your stop would be behind, especially with the limiter here. So it, no, I don't. There's no VIBs or anything, so I'm not really worried about anything else here. I basically just want to be protected to this limiter, which is still magnetic. And then, like, now that the 445 is done, I basically want to see new high, which we get. So this is good for price action. It's just basically pending limits, assuming it's a true day. Seeing what we like, seeing if you can just do like a mechanical entry based on data. Yeah, no, it's basically, so 83% of the time we don't break the 0.5. With none of the times selected, the average is 1.8. So all I'm looking for is, can I get a 3R trade, and then it it's saying that this negative 0.1 to negative 0.3. That's right. And that's the same for here and the medium max. And then this is where I just wasn't looking at the max retracements, because we want the new high. So like obviously the M7 retracement is more important or more valuable, but then we have to accept the limiter. So basically all I'm looking for is, can I get a 3 to 5R trade using the 0.1 to 0.2 with the 1.8 and just put a pending limit order. Yeah, like, so I did say I try and get 5, so like we could have squeezed this down here. The problem is negative 0.1 and negative 0.2 is the the uh, the mode. So it's, you're basically risking that it doesn't come in here. So like I'd be happy with the 4R in this case, especially when our retracement time is 445. So now, like, we saw this new low in here. I basically just want this to go up. We're obviously at this point waiting until 8:30 because that's the extension time. Once this, and I would, because we're not even close to the extension. So once we make this new high here, I would be going to break even finally. It's the first time I'd be break even on this trade. and then you hit your target. No, I would probably uh, have like, I'd be way up here with my take profit, and then when we have this massive impulsive candle, just because I understand how, yeah, um, because I understand how volatile this period can be. I would have my stop 2 ticks below this VIB now. And then when we actually get this close, I would be directly behind this candle. When we get this close and then this VIB come up, I would be 2 ticks behind this limiter. When we get this close, I would just be behind this candle now, and I'd be out. So that would be how I would trail that at 8:30. Right. So the difference is I closed at the end of the ODR because we had already hit all of the extension targets. Yeah. So if at 8:30 we've smashed like all the extensions that I can see being hit, yeah, I'm closing that because I'm fully expecting a retracement. Whereas here, our extension time is 8:30. We haven't hit any of the extensions, so I'm assuming that in the transition, it's going for the extensions. It's just how it works. Yeah. Yeah. No, the weekly DR is right here. Yeah. No, weekly DR is this like light blue box. But yeah, I'd be stopped here 4.5 hour. I'm fine with that. Could keep going up. Doesn't matter. Oops, didn't mean to keep going. I'd be in here regardless. Yep. It's the dispo moneymaker. So I'd be here. The IDR is too far away, so I'd be 2 ticks below. Yeah, and you could be right. There's like, yeah, but then the reverse is, so one, I guess, yeah. So you could be, yeah, like, and then you'd be trailing this. Yeah, so you could still be in this, and then this is a free entry. Well, yeah, so yeah, so I'd be like, I'd be 100% in this trade. Like we already know that. And I'd be, no, but before this came down, I was gonna say I'd be really aggressive here because I'm already like, yeah, so I'm not losing all this money. So I'd probably be out here. Like I would have trailed when this broke up. I would have trailed here. Yeah, I would just be trailing them. Like they'd both have the same stop because I don't want to lose the profits that are here. And if I'm willing to stop this here, then I believe the market's reversing. Like that's the only reason that I'm trailing, right? Like I don't think it's going to keep going any further. So if you're yeah, and then it just reverses. Yeah. It was last month. That's funny. Yeah, I gotta learn. Like, I do want to go and learn false states, but it's so much work to like be engineering like the negative side of an upside or downside, and it's like if you're because you need you you need to be able to have the same probabilities as if you're trading the other way, because otherwise you're like at a negative equity. So it's like yeah, yep. And usually the reversals don't give the same thing as like where I would buy here. Mm-hmm. Disgustingly beautiful. But and he held it. Yeah, yeah, yeah. But so like there's also arguments that's like stuff that I want to backtest because there's the visual here is like so if this is 16% chance that this is the high of the day plus this is 67% chance, like if you just have this on, can you just be like, hey, this is the end of the time mode. Can we just short here? And like, how often can we be right? So let's say you go in here, you're above the magnetic. Yeah, exactly. So 7R. See, I would only ever target the IDR low, the trunk monkey. But it's like when you play through these days, like how often do like false days only happen 20% of the time, right? 1 out of 2 days. There you go. Yeah. I wonder if you could break this down. Oh no, there's no. It's too far back. And then it's days like this is nothing, right? It's like this is why I don't like using the indicator because the only time I find it's like super good is on send it days. Like where like the like this lines up perfectly. And it's like, okay. Whereas I can look at the data and I can be like, yeah, but then this holds true, right? It doesn't yeah, it doesn't break the 0.5. You could literally be like here. Well, so like I've said like many times, maybe not publicly, but like off a gap bounce, I think you could back test and you could successfully take it back to the DR like pretty consistently. And then when you see all these rejections, you're like, okay, let's just go like this. That's still a true day, you mean? Yeah. But that's all stuff, like, that's what Olia does, right? Like, that's why he gets $100 a week, because he's like, he sees stuff in such real time and then uses the data, and he's just like, okay, point 0.5 is holding up. We're standing here. Like, he doesn't even use the AMR. He's like, we're going back down here. We're going to use this limiter. It's like, what? What do you mean you're used, like what? And that's kind of why I do this. Like I'm up, obviously, but I do this so that like you guys see, like you can make this pretty mechanical and have pretty insane success. Like when I say I don't think you can lose with DR IDR if you've backtested enough, I mean that. Like I honestly just don't think you can, because it's all data, it's all statistical, and it's like, I guarantee you, if all you did was look for an entry and had your stop, say, 2 ticks behind the negative 0.5, every day that you got a confirmation and you went for 3R, 4R, 5R, whatever, you just made it mechanical, I think you win. Like, if you have 178 data sets for Wednesday True Long green box, and you have, we can even add in the red box, which ends up having longer extensions on a true day. It's still 80%. So we've got 178 and 82. That's 260 or 230. No, 250. Yeah. You're basically, yeah. So like if you have a one, exactly. So it's like, and this is the, yeah, yeah, you got your expenses in there, but it's stupid. Like if people just stop trying to add their own like prerogative to it and just use the data, you can't lose. It's like what I did on Friday, and I was like, okay, all the confluences say that this is a short day. I ended up break even here, whatever this was, and then I still, even after we got the wick confirmation, I was like, no, the confluences still say it's gonna be. It's like, no, on a wick confirmation, we have an 80% chance of a true day. Why the fuck am I shorting it still? Like, if I didn't, well, ES was a good trading day though. I liked ES. Well, man, well, it depends. ES. So this is what I was. No, I don't trade it on Newsdays either. But I was showing Will this. So if you take this wick, which is the NFP wick, it literally trades to the 50%, doesn't come below this DRC, comes back up, and it dibs up. You literally could have taken this, stop below the 0.5 to the weekly DR, no questions. Yeah, wick to wick. It's just the wick. And ES was super easy. Like I saw this app. Oh, 100%. And NQ was a lot harder, but like to trade the same like theory, but it actually went to the point 0.5. Like it to the tick. And then but this is like this is how I used to trade, right? Like so I see this stuff. This would have been really hard to like catch other than like it's to the this so we had the manipulation. It came down. It literally to the tick on this body's wick and the 50% of the entire move, and then it just went. That's why when you said you're short, and I like looked at it, and I was here live with Will, I'm like, I don't short that. I don't see the short because especially when this confirms long, I'm like, well, but you shorted it after all these rejections. Like I kind of saw like why you shorted it, but then when I looked at NQ, it was the same as the other day. I'm like, I squeezed this out. I'm like, man, we just swept all the lows, and we just had this massive like this is going up. Like this is yeah. Yeah. Well, this was the NQ long. Like if I was just looking at NQ, would have been hard. But the ES long, like I would have longed it right here if I was paying attention. I would have been like, "Yep." Yeah, like this to the ticks on the DR. It's 50% of this wick. We already like this just took. Oh yeah, you could have been. Yeah, yeah. I I'm gonna start trading ES and NQ again, just because I'm just using like the principles that I need, but um, mostly just time and price. But this is probably the only time that I would ever say that a box trade's fine. Because like I'm with M7. Like you usually shouldn't be trading this because the box can just do like all kinds of crazy shit. But when you get a 50% to the tick, it's respecting DRC from ADR. We swept all of the lows with this wick. Like the odds, like if this breaks the point 0.5, then there's more question. But when this is to the tick on the point 0.5, and then you look over at ES and it starts dipping up, you're like, we going long, baby. I don't know if I would have traded through the. Yeah, I probably would have traded through the DR after this confirmed inside the DR. Like that's pretty strong. And then it doesn't break down, respects the DR, closes inside the DR again, and then just up. I don't know what the target would have been for that, but an NQ. Oh my god, how many points is that? $307 to the tip. That's a big day. It's a big day in NQ. I'll probably get stopped out like here. 235, 236. Well, I also called this short on in the ODR. I think it was the ODR. Yeah, I posted. I'm like, I saw this short for CL. Oh, I'm still in replay mode. I'm like, what am I not seeing here? Yeah, yeah. Yeah, see, and this is where like I just haven't looked at range contractions enough. Um oops. Oh. I recorded it. You can watch. No problem. Yeah, but so the ES, man, like I I remember looking at this. Uh, I woke up. What did I do? Oh no, this was after I was at the gym, like here, and I remember opening it and I saw this short and then this long. I'm like, oh, that's shitty. But then I remember I opened NQ. I'm like, oh, this shorted and this never came back. I'm like, this just completely stalled out. I'm like, I'm shorting this all day on NQ. I'm like, yeah. I'm like, yeah. Even if you wait for like, because it confirmed short. So, so like if you go Thursday ODR short red box, or is that a green box? Why can't I see the box? No, it's got to be a red box. True short red box. Oh yeah, yeah, yeah. I'm colorblind, so I'm excused. Um, so where is? So basically, like in here, there's nowhere. Like you get the confirmation, but then this is all uh like buying price action. So like I don't think there's anywhere in here that I short for this entire like green candle, doji, green candle, doji. Yeah, green candle. But then once we get here, like there's no true AMR here at all. Like I don't like there's there's nothing here that says short like at all. But then when we get here, we get yeah, like it just stops. Like we get a short candle, then we get a green, but like nothing is going up. And then the one candle that we have that goes up immediately shorts back down. We still haven't broken the DR. We've now broken back inside the IDR. So like when you start seeing all these dibs to this short side, it's like you could take a trade. Yeah, yeah, you could take a short anywhere like in this range. Like literally when this starts all happening, anywhere in here you could short and be like, hey, like I just don't want to see a long confirmation. You've got this big wick here, you could be like, you know what? I'll be above uh yeah, you're like yeah, so you're like okay, like I'm I'm happy being here if it confirms long like whatever. We already had the confirmed short. We've had kind of sideways price action. We've created like some upwards movement. We've got all these DRCs, these limiters and stuff here. So it's like if it comes up, no, you yeah, like I would even argue that people are probably just going for like the ODR low. Like that would be a valid target. I would probably extend it to the gap just in case, because in my head, if we if we somehow get this breakthrough transition, like I'm never expecting like this is like you're watching this, you're like, oh, this is beautiful. This is like a liquidation dream. But like what you're actually thinking is gonna happen is like, and then during like the RDR box formation, we're gonna potentially break this, and then like later in the day we get the gap fill. Like this is more what you would normally see. So I would target the gap fill because I think if we're breaking the 0.5, we're going to the gap. Oh, it's yeah, it can come all the way back up here, like no questions. Um, but yeah, like nobody's taking it down here. This is an impossibility. Well, there's no other target, and like the old weekly DR would be like crazy. Like everybody would be like, why are you targeting that? Yeah, you'd be like this would be the most extensive target. Yeah, yeah. You're like here, like down here is just hopes and dreams. You're like, you know what? Maybe we hit our 33R trade today. But no, like here, and then this all just depends like where you want to enter. Like you could argue that like when this starts dibbing, so like you actually have like a bigger stop. You could argue that once it breaks the IDR, you don't want it to come back up to the IDR, so you can be up here. Like there's all kinds of things that you can argue about, but I would say that overall, I think it went further than that. This would be where are we here? This would be another 4. So if we copy this, oh my god. Yeah, I went to like 9 something in there. Yeah, it was a crazy day. Yeah, like so like the data doesn't suggest this happening. Like nothing suggests it happening. Like even hitting this target, you're just assuming that it's hitting this target in between session creation. Yeah, so it's like ODR low, most respectable gap fill. You're holding in between sessions because you know how it works. Probably 30, 27 and a half. But it's yeah, I remember. Oh, that's why. So, but here's the other thing is so we all understand how certain things operate. And I could argue that if it breaks this DRC cluster and this DRC cluster, there's nothing here. So like your target could actually be the weekly box. You could wait to see if there's a huge reaction off this, you just close. Like you could use the gap as your like your TP, your stop, yeah. But then when you see this dip down, like you could be like, "Okay, let's see what happens." Yeah, exactly. So it's like when this dips and breaks through this DRC, you're just like, "Okay, let's see what happens." Barrels through the weekly DR, you're like, "Oh, okay. I'll put my stop at this new magnetic Vib." It comes back up, you're like, "Okay, I'm probably getting stopped out here." Slams back down, you're like, "Okay, we got to close inside the weekly DR again. Let's just go to the DRC." Oh, for sure it is. For sure it is. 55 points. And then, yeah, but not you're in so much profit. You're just like, what do you do? And then it dibs up and just slams back down, rejects off the midline, comes back up. You're like, yeah, I'm going to put my stop at the weekly DR now. And then it just plummets. You're like there's really like if you're actually being smart with your stops and you're using like DRCs, volume imbalances, waiting for closes below the previous low, like you really could take this like all the way down here, but you'd have to be like actively monitoring it. But then there's mm-hmm. Oh yeah, you have to be. It's completely emotionless. You're like, hey, when this happens, what are you doing? When this happens, what are you doing? Well, most people would just have a target and they just hit it, right? So like I think people that are trying to do this advanced like trailing, like I think they accept like if this comes back here, okay, I lose 6R. Like it just is what it is. Um I don't think most people are trailing. Oh, 100%. 100%. It's like you're like what are you hoping for, right? Like this is a crazy move. Like in 2018 this was common, but like a 500 point day, that's just yeah, exactly. It's just like this is just not normal. Like you can look at any other day. Like I guess you could argue what day was this? This was just before end of day. Yeah, but like there's no other. Yeah. So like this day was 400 points. I wish you could just like yeah, that's fine. I don't have them turned on. This is five. Yeah, like so 550 points is like that's like a big day. Oh yeah, 400 points. It's easy to just look at like the big days. 400 points. 400 points. Yeah, like most days have like a 200 point. Yeah, it's pretty crazy. NQ was a monster that day. I was just like, I was at the gym. I'm like, kind of wish I was on my computer right now because I was looking at NQ, and it was the same. Like there was no like point here, or I was looking at ES. I was like, there's no real point here where I wanted to short. I'm like, there's no bearish price action, and then yeah, and then I remember it was actually on this confirmation. I was like, oh, whatever, I'm gonna go to the gym. And then when I was I was in between sets, and I was like, I wonder what NQ did today. And then it was like 12:30. I'm like, man. I'm like, I think this is a short. And I looked at. Yeah, and then I looked at ES, and I'm like, oh man, this confirmed, and then it broke back below. I'm like, I wanted like it just I just don't trade off my phone. It's just one of my rules. So I was like, I think this is gonna sell off, and then I uh, I went to the I finished at the gym, and then I went and picked up my coveralls, and I came home, and it was like 2:20, and I was like, "Are you fucking kidding me right now?" I was like, I was just like, I'm like, man, this would have been like a 45-hour day. I'm like, but it's half of this, half of that. Mm-hmm. Yeah, and then I remembered, yeah, of course, you have to be. And then I just remember, yeah, and then I remember I was doing time and price with Will, and I think somebody else was here too. I was just explaining my logic behind like taking the shorts here, and then you shared your ESNNQ trades, and I remember I clicked over, and we were like, it was like here, it was like 9:30 or whatever. Yeah. Oh, yeah, right. Yeah, yeah, yeah. It was in here. And I remember like I recorded it. You could go listen. I'm like, I see like what he sees, and then I went like this. And I'm like, oh no, no, I don't see it. I was like, I would never short this. I was like, we just took all the lows, and then that's when they said, J Bell, why aren't you in here with us? Yeah. Uh, no, it's all good. I was like, nope, I don't short that. And then like two candles later, it like blew through. I'm like, well, he just got obliterated. What's up, trader? No, so I enter before the time if it gives me a good R. If it doesn't give me a good R, then like so say where can I find an example? Exactly, like that's right. So where can I find yeah, like so as yeah, that's right. I'm always trying to get 5R off of like those types of trades. Whereas something like ES on Friday, so if we go Friday, uh, Friday long true green box. So our drop off time for Friday is basically 5:15. Oh, this is ODR, RDR. So our drop off time I would say is 11:45. So I guess if you're using the 70th percentile, it's 12:45 to 1, but that's yeah, I'm here. I'll explain. So like the 70th percentile is here, but like this is all equal. So I would be looking for my trade within this range. So 12:45 or 11:45 to 12 would be like what I would consider the last time I'd be looking for a trade based on M7 retracement times. So 11:45 to 12. So at this point, let's go 11:45 to 12. I'm just going to put a box here. Obviously, if the median max retracement is negative 0.2, but the mode is 0.2 to 0, when I see this price action and then this rejects, 0.2 to 0 just got respected. So like you could go into a trade here using this as the AMR, going for whatever like your target is. So time and price to me is I'm only using time if I don't get the entry that I'm looking for. So like 1.2 is the median extension. So what I would need, and 0.5 on a Friday, it's actually an 86% chance it doesn't get broken. And negative 0.2 is like the drop off. So I would be looking for a 5-hour trade like this after confirmation. And then obviously my target is just whatever, but I want to know that I can get 5-hour within this realm. When I see something like this, I'm looking at time and price a lot harder, because this is the drop off, the 11:45 to 12, but you can see that the 11 to 11:15 is basically saying that 30% of all retracements have happened here. So when you see a rejection like this, and it tried to push down, you can use that 11:15. You can use this as the AMR now, right? Because your price has made a new high after confirmation, so it's more likely to be a long day or a true day. And it went higher than the deviation requirement past the DR, which in this case would have been whatever this is. So we went higher, so it's more likely to be a true day. So as 11:15 is a drop-off time, when you see, so like this is where time would come into effect for me, is basically how I look at it. Whereas my other trade, this is just a 5-hour trade going to target, and then obviously I'd target higher if it gave me like a reason to. So like if it came down to the 0 or negative, the 0, then I'm getting like an 8.7 on this day. I guess I probably wouldn't get that. I'd probably get like 6.6. So I'm just using, it's not really time and price. It's more so using data to assume that on a true day, it's not going past certain areas. So I'm like using the reverse implied line in the sand that Twist uses. So like I'm basically saying that I agree with his hypothesis that it shouldn't go past this, and I'm just saying that if it comes within the median range, if I can get 5R out of this trade, assuming it's a true day, I'm happy with that. And then if it doesn't come into this range within a certain time frame, and I see stuff that is showing me that like within time and price rules, this is a reason that I could enter this trade, well, then I enter the trade. If that makes sense. Yeah, it's like yeah, so like once this comes down and rejects, like and this is where you have to play with your like your rules and stuff, right? Like so you could literally be like once we get this rejection, this is technically the AMR, but ex- exactly. So you would enter on the open of this candle, and once you get this rejection inside, it rejects the limiters, rejects the weekly DR, uh, and the DR. Yeah, you're like, I just want this to go this way, like because if it comes down here, it's probably just a false day or like getting a way deeper retracement. So it's like this candle is very indicative of what price should do if it's going to be a true day. But this requires just way more backtesting. So like on ES, a three tick like that's a really tight stop. Like a three tick stop is it's not crazy if you want or yeah, it's not crazy if you understand what you're doing. It's whereas I like where my stop was because yeah, like whichever, that's all fine. Um, like so I like this because I'm happy with 5R and like does 15 sound nice? Sure, of course it does. But it's like what's more realistic to be hitting all the time, right? Like, and the easy way to think about it is the more aggressive you are, the more you're going to lose unless you're absolutely certain what you're doing is right. So, by doing something like, sure, but so does this. As long as you know, and as long as you know that what you think is true is actually true, because how many times can you prove that the weekly DR and two limiters hold up? Like you have to be able to test something to that level, right? Because I can also tell you from experience that for this to come down here, come up, for it to retest 50% of this wick at the very least is very common. And here's a prime example. So this wick, this is the clothesline. We break through more than 50% of this wick. So it's like or you can go to the top side, right? Once it once it breaks out, I wouldn't really call any of these breaks, but once it breaks here, you could assume that it's not going to come back into the weekly DR because we've truly broken out of it a second time and then it still came back in. So it's you can have really aggressive stops if you're comfortable with the R and whatever. I personally would rather get 3 to 5R just consistently, have a little bit of a wider stop, and just win more often. My my goal isn't to become a multimillionaire overnight. My goal is to become a multimillionaire this year. So I don't need 16-hour trades. I don't need 100-hour, 150-hour week. I just want consistent wins every week to compound my account so that I'm where I want to be in life throughout this year. Doesn't have to be tomorrow. Doesn't have to be 100%. I think I posted in the group like a week or two ago. I said I'm 100% done with prop accounts. Like I only trade live now. Real cash. I don't care about any of this, because the easy way to explain it is I calculated, so between when I traded Forex, including my payouts in Forex, my futures account, and just all of the money that I've invested into trying to make prop accounts work for me, I've for sure spent over 15 grand. Like, for sure. So if I would have just put that 15 grand into a live account, I could have risked 2% a trade almost indefinitely and been further ahead than I have been with the prop accounts. So I just basically ran the numbers. It's like prop accounts, the allure of it and the added money makes sense, but like the equivalent of that is, so you have 10% trailing stop on most of them. I think it's 10%. So by that logic, you could just go put $1,000 into a personal account, and if that's the leverage that you want, you just risk 10% a trade. Like, you're in one trade at 10R, you're going to have more money than if you exactly. So it's just stupid. Like, there's no benefit to prop accounts. And I just agree with what M7's been saying. I ran the numbers. I looked at how much money that I put into prop accounts. I looked at because it's not, the other thing of it is it's not even just passing the accounts. They all have requirements that once you pass, you have to pay extra money to actually get the account. And you also have to trade a certain amount of days on most of these companies. And you also have to, and news days don't count, or not news days, holidays don't count. So like on Apex, for example, you need 10 trading days. But if there's a holiday on back-to-back days or back-to-back weeks, you actually only get 8 days in those 2 weeks. So you need to trade 2 more days. So if you can only get a payout every 10 days of trading, that means that you actually can only get one payout that month. Like, so there's just way too many limitations. And so there's no value when and then it even goes further than that. So then they also say that you can only take a maximum of $2,000 every 10 trading days for the first 3 months. So it doesn't matter how much profit you make. You can't get it out. Yeah. Yeah. Yeah, like I 100%. So then the other side of it, sorry to cut you off, but it's very important. If you're waiting to make sure you can follow your rules, do all the back testing you want. Do all of it. backtest every day, 10 hours a day. But make sure you're trading live every single session that you have committed to with one micro. Because backtesting and live trading are just not the same thing. You can have the best results in the world in backtesting and still fail because you think you're following your rules live. So like, say you trade on Monday and you're only trading RDR. When you're done trading that day, go back and re-engineer that day as if you were following your rules. Don't think about what you did, think about what you should have done. That's how you're going to get real results. And then obviously, so like another argument that I have based on what J-Bell just said, this would never be my stop if I was trading micros. There's just way too much slippage. My stop is for sure behind this DR, and it's probably even 2 ticks further than that if I'm trading micros. Because the slippage on micros is just, like, if I'm using this as my stop, I'm just assuming that this is getting hit. It's not even grandma stops. It's just like you have a 5 or 6 point stop. Like that's fine. That's normal. And then as you successfully compound a micro account and you move into full contracts, then you can tighten your stops up a bit because there is no slippage on full contracts. Well, there is, but it's yeah. So if you're trading on, so whatever you think your stop should be on an MES or MCL, add 3 ticks to it. Yes, your R is going to be less. Yeah, exactly. So it's like, yeah, exactly. So like, and that's okay because if you win a 5 hour trade and say it drops down to a 3 hour or a 4 hour or whatever because you had to increase your stop, I guarantee you if you win 6 of those this week, you're still way further ahead than you were last week, and you're ahead of 99% of the people anyways. and and a really good thing to do as well if you're backtesting, because like everybody knows to backtest on the actual contract, like CL, ES, whatever. What you can do is say you were backtesting CL, and this is actually a prime example. So this trade on the micro, so this was the trade. The trade was the 04 or 03, whatever. You get in on this close, you stop below the 05, and then you're running the target. You cop. Yeah. So this is the trade. So it's 86.73, 86.65. You can paste this. So if you copy the trade on the big contract, you can paste it on the little contract. And then this is, oh, why did it do that? It used to do it exact. Weird. 86. Let's see. 86.73 would be here. Nope. That's weird. It used to copy it directly over. And make sure your standard deviation lines aren't on here, because they don't matter, because if you try and enter off, maybe that's what it was. Maybe I was testing that. Hold on a second. Let's add standard deviation. Oh, yeah. There we go. Yeah, that's what it was. Okay, so if you match it to the price, this trade works out. But if you match it to the deviations, yeah, exactly. Yeah. So this is what it was. I was like, no, I lost this trade based on something, but I want yeah. So if you do the negative 0.4 and you do one tick behind negative 0.5, you lose this trade. Whereas over here, it doesn't even, it goes nowhere near. So it's really important that you either add a couple ticks, don't have your retracement grid on because it's useless, and what I yeah, it's all about the price. It's all about the price. And you can, what some guys do is they just have like this, and then you come in here and you don't match the symbol, and you can change this to the micro, and then when you're trading it, you just go over here, you put your contract on, and you go, okay, we're going to go in at 7.3, which should be the 0.4, 0.2, whatever. Stop it's going to be, and you're matching it up over here. You're not looking at the micro side, and then you're like, whatever. And that ends up being your trade. I don't. The what? And then add some extra. That's right. Yeah. I do it on here, and I just have this on another screen. Yeah. Yeah, so like you can drop down to the 1 minute to trade. Yeah, so like here. Mm-hmm. Yeah, it's literally just, oh, so is this how people put like text like in the middle of the screen? Like sometimes you'll see people post like it'll be like a 3-word phrase or whatever. That's got to be how they do it. What do you mean it's like where they're like refuse, reuse, recycle. And it's just like always there. Here. Yeah. Yeah, I saw. Yeah, I don't ever trade monkey because I just usually doesn't give me enough R, and I'm usually already in a trade like yeah, I can't believe I missed this. Like you could have been in here, easy. Stop here, and then you could have got in here for a second entry. Oh, then I wouldn't have re-entered if that was the median. I thought the median was 1.8. Yeah, and I've come like back testing with quant a bit. I just the target's the target. I don't think you need to subtract the 1.2 anymore or point 0.2. So then when this came back down, you can be like, okay, let's monkey here. And then yeah, and then your stop for both would just be right here. And it's like, okay, I'm up almost 3. So you end up getting 15R on the day. Yeah, I got you. You wouldn't have got it though, because well, no, two. You, oh, you mean like you'd be? Oh, I see. I see. Gives you like the same R. Interesting. More stuff to backtest, you know? I'm just going to stop recording. Hopefully, people find value in this. I said we're going to stop an hour ago.